Right, welcome and thank you for joining us. I am Allison Berger. I'm joined today by Grayson Blazik. We are both financial advisors and partners at Financial Symmetry in Raleigh, North Carolina. Grayson is also an enrolled agent, and he is going to walk us through the process of filing your backdoor Roth IRA contributions on your tax return. So this can be a complicated strategy, but it is a great way for high income earners to get money into a Roth IRA, which, as a reminder, the Roth IRAs grow completely tax-free and your withdrawals will be completely tax-free in retirement as well. So we do have some great resources on our website, which we'll share with you today as well, walking through the details there. So for high income earners, I'm going to start here with our tax cheat sheet. This is typically what we will consult to see if this applies to you. So in order to contribute to Roth IRAs, your income has to be below a certain level. So for a single filer, if your income is above $161,000 for the 2024 tax year, or for a married filer, if you're over $240,000 for your adjusted gross income, your income is too high and you are ineligible to contribute to a Roth IRA directly. Fortunately, there is something called a backdoor way to get your money inside the Roth IRA. So we'll talk about that a little bit more. We talked about the benefits. This is a post on our website, which we'll share in the show notes for this, but just shows essentially what you can do is make a non-deductible contribution to a traditional IRA and then convert it to a Roth IRA. This does require some extra reporting on your tax return, and unfortunately this is something that we see done incorrectly with fairly good frequency. So we want to walk through, if you're filing in TurboTax, this is what you will want to walk through. And if it becomes too complicated, we highly encourage you to reach out to a tax professional. If you are implementing this strategy, typically working with a professional to prepare your tax return who has done these over and over again and understands the nuance is going to be extremely beneficial. So Grayson, why don't you kind of walk us through what this process looks like and what the ramifications might be of getting this wrong.
So to Allison's point, proper tax reporting of the backdoor Roth strategy really is the final stage of the process. Up to this point, you've likely already made the IRA contribution. It's been converted to Roth. So it's great. You feel good. But if you don't properly report it on your tax return, it very likely would show as a fully taxable conversion. So essentially, you'd be paying tax on the money you're converting and paying money you've already paid tax on, which completely defeats the purpose. So really what we want to walk through today is walking step by step through TurboTax online so that you are able to properly report the backdoor Roth IRA contribution and the conversion into your Roth IRA. So I will share my screen and we'll walk through it together.
And to Grayson's point, that is something that we see reported as a taxable conversion fairly regularly, and it is very easy to overlook because a lot of times it's not an enormous amount. And if you're used to writing a check or having a balance due with your tax return, you could easily not notice it and pay tax on that money twice. And I don't think the IRS is going to come back and let you know about that mistake and give you your money back. So we want to make sure we get it right for you.
Absolutely. So this is TurboTax Online, and I wanted to start with the two places on your tax return that are going to be impacted by the backdoor Roth IRA contribution and the conversion. So the first is going to be Form 1040. This is kind of your home page or the front page of your tax return that we're all very used to seeing. So the conversion itself is going to be shown on line 4A and line 4B. Currently it's blank, but as we go through this, you'll see it change. And then a new form that you may not be as familiar with is Form 8606. This is to indicate that you made a non-deductible IRA contribution for the current tax year. And on the second page, you will see the conversion from the traditional IRA to your Roth IRA. So currently they're blank. Let's get started. In TurboTax, you'll log in, of course, and there are several places that you'll need to update. So step 1 is to indicate and let the software know that you made a non-deductible IRA contribution for 2024. You'll go to the deductions and credits section and select the drop-down. Traditional IRA and Roth IRA contributions will be the section we're looking for. In my software, it already shows up. If you do the drop-down and it does not yet show, select Add Tax Breaks. You will scroll down to the Retirement and Investments section. Traditional and Roth IRA contributions, and select Add. Now that it's been added, you'll click the little pencil mark next to that line item or select Start if it says that. So for 2024, we are indicating that you made a traditional IRA contribution. You'll do the checkbox below your name and hit Continue. Did Joe or did you contribute to a traditional IRA? You'll select Yes, that you did. Is this a repayment of a retirement distribution? You'll select No. Tell us how much you contributed. So this is going to vary depending on your age, how much you actually contributed in the maximum. For Joe, we're assuming he maxed his IRA contribution for the year and he's under age 50. So he made a $7,000 contribution to his traditional IRA for 2024. You'll type that into this box and you'll hit Continue.
And that is a great point, Grayson. So 7,000 is the maximum. If you don't have quite enough to hit that maximum, you could do 3,000, you could do 2,000, however much you can do. We recommend getting that money in there for tax-free growth. And then if you're over 50, you could do 8,000. So be aware of those maximums and that you don't have to do the maximum as well.
Yes. So once you have typed that in, you'll hit Continue. Did you change your mind? You'll select No. Retirement plan coverage. This is going to vary, again, depending on your situation. What it's asking is, did you have a job that had a 401k plan or a 403b plan that allowed you to participate? In this case, Joe did, so you'd select Yes. This scenario also assumes that Joe is married to Jane. So similar to the prior question, did she have a retirement plan at work? We'll select Yes, but again, it'll depend on your situation. Any excess IRA contributions before 2024, you'll select No. And then you're going to get this alert that's going to say that your income is too high to deduct an IRA contribution. So going all the way back to the beginning of this video, Allison shared those adjusted gross income charts. And so in this case, Joe is above the threshold to make a contribution directly to a traditional IRA that's deductible or directly to a Roth IRA. So you're going to get this alert and you'll hit Continue. We will show you the results later. You'll hit Continue on that screen and you're done. So step 1 of the reporting process is now complete. You have indicated to the tax software that you made a contribution to a traditional IRA for the current tax year and it was non-deductible in nature. Perfect. So depending on whether or not you actually made the conversion in the current tax year will depend on if you did or not. So in this scenario, they did. So this taxpayer would have received a 1099-R tax form from purging or from their plan custodian, and in which case you're going to report that in the income section of TurboTax. So you go to the income section, select the drop-down, IRA, 401k, and pension plan withdrawals, 1099-R. It's reporting it here, or you can hit Add Income and find that section there. Once added, you'll select the pencil next to that line item, and we'll begin reporting. So the first question, did you get a 1099-R in 2024? You'll select yes. TurboTax is pretty neat where it allows you to import the information. However, for today's purposes, we are going to manually enter this information. Type it in myself. We're going to make the assumption that this is for Joe. So you'll select the taxpayer in question and hit continue. Who gave you a 1099-R? You will select financial institution 1099-R and hit continue. You will type in the information reported on the 1099-R, which is going to look something like this. This is the purging 1099-R that you're likely familiar with. So you will type in the information about purging, or if you've imported it, it will already be there for you. For today's purposes, we won't go through that process. Now, on the 1099-R, there are several data points you need to key into TurboTax, or it'll already be there if it's imported. In this case, it was a $7,000 gross distribution and a $7,000 taxable amount. So we'll key that in. Taxable amount is not determined. That box is checked. So you'll select that. And then for distribution code, it'll either be a 2, in this case, if the client is young, or if you are younger than 59 and a half. If you're over 59 and a half, it'll be a 1. And you will select IRA simple box is checked. And then you'll hit continue. Where's your distribution form? None of the above. Do any of these situations apply to you? You'll select none of these apply. Tell us if you moved the money through a rollover or conversion. You'll select I converted some or all of it to a Roth IRA and hit continue. Did you convert all of this amount to a Roth IRA? And you'll select yes, all of this money was converted to a Roth IRA and hit continue. So if you are married filing jointly and your spouse went through the same process, you would select yes. For today, we will select no. Review your info, that should be listed there, and you'll hit continue. Have you taken the disaster distribution? You'll select no. Any non-deductible contributions? You'll select yes. Basis as of the end of the year, you'll select 0. Tell us the value, you'll put 0 and hit continue. You will select none of these apply. Okay, so you have keyed in both the IRA contribution and you've keyed in the 1099-R, which represents the conversion. So if you followed these steps appropriately, you will then look at your completed 8606 and completed 1040. So the completed 8606 for this person should look like this. So line 1 will show the amount of contribution they actually made into their IRA. So it was $7,000. It'll be represented on line 1, 3, 5, and 14. You'll see $7,000 on all of those lines of your Form 8606. And then the conversion will show on the second page of the 8606. Line 16 will be the full amount listed in box 1 of the 1099-R. Line 17 will show line 14 from above, and then line 18 is the difference between the two. In this case, any interest that was earned within the IRA prior to the conversion occurring, so in this case it was $1, in your case it may be zero, it may be a few dollars, it really depends on the amount of interest paid before funds were converted. So there will be a very small amount of taxable income potentially, and then from here this will carry over to your Form 1040. So going back to line 4A, you're going to see the full amount listed on the 1099-R, and line 4B will show that small amount of taxable income, if any, and that is how you properly report the Backdoor Roth IRA contribution in TurboTax.
So Grayson, that was a lot of steps that we just went through. And I think the scenario that we walked through was probably the cleanest version of how a backdoor Roth IRA contribution can happen, right? But there can be a little bit more nuance. So what are some of the other situations we might see where it might not be quite so clean?
There are several situations where it can be a little bit more complicated. In cases where you made prior year non-deductible contributions to your IRA for prior tax years, really each year we go along, you should be filing Form 8606. You're letting the IRS know that I made a non-deductible IRA contribution, and they consider any contributions you don't deduct to be what's called basis in the IRA. So if we come to 2024, you go to do the backdoor Roth conversion, and you find that you have not properly reported past year contributions, fortunately, the IRS allows you to go back and add those, but it does require the Form 8606s to be mailed in. So it's a little bit archaic, unfortunately, but you have to prepare past year 8606s, sign them, and mail them into the IRS. We do it pretty regularly with clients. Hopefully, there's no contributions that are missed, but if so, let us know and we can walk you through that process and very likely prepare them for you.
Okay, and those are paper forms that are mailed into the IRS if you have missed this process in prior years. As you said, a little archaic, but fairly straightforward to get those done. One other thing which you mentioned is you do have until April 15th of the current year to make your contribution for the prior tax year. So you might fall into some situations where, yes, you made your contribution for 2024 in the 2025 calendar year, but it is for the 2024 tax year. So the conversion won't actually happen until 2025, and that'll be reported in early 2026. So there are some situations like this where you might have questions, or you might want to pull in a professional to help you get that accomplished. And the situation you walked through with us, Grayson, I think was great too, because it was one where only one spouse was performing the backdoor Roth contribution, which is a fairly common scenario as well. So one thing to keep in mind with these backdoor Roths, which we'll post more information with this in our notes here, is that essentially to do this as such a clean process as we have done, you need to have zero balance in a traditional IRA. And we do fall into a lot of cases where one spouse has a significant traditional IRA contribution. So we may only be doing this for one spouse. Both spouses may or not be qualified. There may also be an opportunity to roll that IRA into your existing employer 401k to open the door for the backdoor Roth IRA. So we want to consider all of these things as we're making these decisions. However, if you do have a very clean scenario where you're making the contribution in the same calendar year and the conversion in the same calendar year, and that is that same tax year, should be fairly clean to report on your tax return, as Grayson has shown there. So Grayson, any other considerations as we're looking at making our backdoor Roth contributions and reporting those accurately and for the greatest tax efficiency and savings over the long term?
Yeah, just be very cognizant and intentional when you're reviewing your tax return prior to filing. Again, it's so important to follow through on this final step so that you don't get taxed on the conversion. Because if done appropriately and properly, you should not have any real tax due, besides maybe a small amount on the interest that's taxable, but it should be a very clean, tax-free conversion.
Yes. And more money inside that Roth IRA means less money going to the IRS, more money that you keep tax-free, that you can save, invest, give to charities, to your family for your retirement purposes. So we want to do that as quickly and efficiently as we can. So if you have questions, feel free to reach out to us. We'll have more information on our website, financialsymmetry.com. Thanks a lot.